Hey guys, this is Market Update. In this video, I want to answer two questions. The first one is short term. What is the event that breaks us out of this pattern? We're still tracking in this uptrend. This is a kind of bullish uptrend pattern right here. So what is going to break us out short term? The second question is at 68,000, right? Is it still time to invest in BTC right here? So I'll answer those two questions in this video. Coming to the current chart pattern, this is an uptrend we're in. These are all of the consolidation patterns we've had this bull market. We're still in this one right here, but this is still bullish in my opinion. We need a catalyst, right? Because this breakout was the BTFP when the Silicon Valley banks started to go under and the bailout. That was the end of the bear market, right? That was the breakout catalyst we needed. Then we had ETF rumors. That was the breakout right here. And then we had the actual ETF flows, which was this. So those catalysts, what's the next catalyst? It's going to be unemployment, right? So if unemployment spikes a little bit, the market's going to go crazy and say, wow, the Fed's going to just cut rates and start, tapering QT even more and maybe even start QT. And that will be the next catalyst, right? So that's not happening yet. The data is still very murky. It's nowhere weak enough for the Fed to start reacting. So that's where this catalyst may actually not appear for a while. And so as time goes on, what we may see over the summer, because it's a very low trading volume environment, we may see this play out, just some consolidation. But that catalyst, we don't really know when it's going to come because we don't know what the data is going to show us. But that's the catalyst for me where we take the next leg. A lot of volatility around that. You might get some sell-off when the market is unsure what the Fed's going to do. Maybe if it's weak enough, the Fed reacts. So that's the catalyst to break us into the next phase of the bull market. And it could be a really, really big one because that is usually when Bitcoin really goes to new all-time highs. So I think that's coming. The time horizon, we don't really know. If you do trade though, check out the deposit bonus to Bybit in the description, up to $30,000 to make a deposit and trade on there. You can get that deposit bonus details via the link below. That catalyst that we're waiting for may actually not be as big as previous cycles, especially the last cycle, which was a major event, right? The pandemic and then all the spending and everything. What we may get is more like the 2017 cycle, which is just actually there's just grinding up with 20% drawdowns, 25% drawdowns along the way. We may get that as well. So for me, it's not really about trading these cycles. It's just being in Bitcoin because that's the thing that's performing. And so that's what you should be in over and above everything else, as long as it fits your risk profile and your volatility profile. Essentially, over the long term, we have to outperform this. This is what the central banks worry about, which is inflation. Of all the, the news articles, the conversation from central banks about inflation, we're tough on inflation, we want to get it down. That's the line. So everything they say about inflation is essentially a psyop and a kind of propaganda to make us think that these people are worried about inflation and that their job is to try and bring it down, where actually their actual job is to create it, right? The fiat currency system creates this inflation. You can see it right here. In any case, we are not going to change this. That's what the system does. So we have to outperform this line, core PCE, right? This is what the Fed looks at, inflation, CPI, all of that stuff. Firstly, the metrics are ridiculous. They don't measure real inflation. Secondly, it never goes down. So the only way to protect yourself is to outperform this. And so let's look at these assets that are usually considered something that you should invest in to outperform, right, what they're doing. Well, Bitcoin, if you take away all of the volatility, that's what it looks like. So if you need to outperform this, that line, right, is what an investor has. That's how an investor's portfolio has performed, right? No trading, anything else. Every single week, invest some savings that you have, 200-week moving average. That is the portfolio performance of a long-term investor, right? Put the BTC price back, right? Very volatile. It doesn't matter because a long-term investor, that's the actual line you're looking at, right? And so a lot of performance from BTC. If we look at Bitcoin over oil, right? It's because you don't want dollars. Okay, dollars are not valuable. They are worth nothing, right? It's only what they can buy you. Actual wealth is energy, education, healthcare, the ability to buy that with some form of purchasing power. So oil, energy, right, the underlying asset for all of civilization, okay, that is being outperformed by BTC. That's really what you got to outperform, right? As long as you can buy energy, food, healthcare, education, that's what you want to buy. So oil is being outperformed by BTC. You can very clearly see that over time as well. Not quite at all-time highs in oil, as you can see here. Bitcoin is very volatile, but I just showed you that 200-week moving average. So that takes all of the volatility out of it, and it's basically going up and right, outperforming inflation, outperforming most other assets, which is great news. For shorter time frames, the very peaks of bull markets are potentially areas where we can make decisions about our own lifestyles. So do you have a liability that you need to pay off, let's say over the next 12 plus months? In that time frame, if Bitcoin has had a massive run in price and it's towards the top of its range, because we know Bitcoin moves in cycles, then you can make decisions about shuffling around your portfolio, essentially taking some profits you've made in BTC and maybe putting it towards other things that would make your lifestyle better. So if you need to pay off some debt or, put some money away for a liability that you know is coming, that is when people can potentially, not take profits, but just rearrange, how they pay for their lifestyle, right? Because Bitcoin does move in these cycles. And so at the top of a bull market, if you're putting a lot of money in there, you should really have at least a 4-year view on that. Because if you're at the top of a bull market, the next 12 to 18 months could be a drawdown. And so you just have to be comfortable with that drawdown if your money's going in, or if you've been in a long time and you've seen that the price is maybe very, very overdone to the upside, then you can rearrange and maybe pay for some lifestyle things that you need. For right now, I don't think we're anywhere near like the top end. I would say Bitcoin is kind of still in the mid range. It's definitely not cheap. It's definitely not towards the lower end of its range. But you can see that really here as well. So, short-term hodler realized cap, we've had a big move up, but that's not the real bull market that usually takes place with BTC, right? Which is that kind of blow off top actually signals the end of the bull market, right? So that would be here up at the top as well if Bitcoin got there. So we're about, we've had a good move. Maybe we have some consolidation here. That catalyst that comes in, which is, economic weakness and debasement of the currency to push it up again. That would be the end of the bull market, right? So that would be the hodl waves coming up to this level. But again, you can see we're not there yet. So it's up to the individual whether you need assets now, you need money now for something, or whether you can wait for the next move. And then when you're up at the top, then you have to think the next 18 months, what cash do I need? What liabilities can be paid right now if you're looking to, trade out short term? So you can see MVRV here, again, around 2. So it's not really overdone. When MVRV is up around 5, 6, that typically shows us that the price is kind of way ahead of its growth trend. But for right here too is, again, kind of mid-level, right? So not very cheap, not very expensive, kind of in the mid-range. And then Bitcoin hash ribbons here. This is actually looking at miners selling. So as you can see, usually after halving, you get the unprofitable miners shutting down, potentially selling some Bitcoin that they have, and you can see that right here. So you can see this was the miner shutdown, right? From when China banned mining. So that came down. A few others here, and we're having one here. So could be a choppy trade over the summer until we get that next catalyst. Eyeballs back on BTC at that point and crypto. And when you get attention coming in over the short term, that's where you get those price moves. And so that catalyst may not come for a bit, maybe a choppy trade for a bit over the summer. The main point here is that the Treasury, the US Treasury, simply has to refinance itself. It has no choice here. I mean, it's spending more than it earns. So we know that it has to refinance itself, and it's not going to allow, interest rates to just creep up and up and up and up and up, right? And so what it wants to do is create economic weakness to then refinance at lower rates and keep these cycles going. Refinance at the bottom, create inflation, draw it down again, refinance at the bottom, right? And so that's what it wants to do. So the good version of this is that the economy weakens a little bit, inflation comes down to target, they can refinance and push dollar liquidity around the world It increases liquidity, asset prices go up, but everyone kind of muddles through. The bad version is they eventually cause some sort of financial crash. I actually don't think that's going to happen in the short term, because they already bail these things out behind the scenes. It's not like they wait for these things to crash anymore and then say, oh, we need to do something about it. The Silicon Valley Bank and the other banks in the US, when they blew up, everything got shut down within a week. Within like 4 or 5 days, the whole thing got sorted out. The Fed said, all your bonds are worth par again, right? We'll just give you the money, give you the assets. Bonds are par, no problem. Within a week. And so I don't think they're going to create this anymore, right? They're really on top of it and they have authoritative control over it. So maybe what we see is more like the 2017 bull market here, which is actually just a grind higher and higher and higher as dollar liquidity is pushed around the world and debasement happens. So we could see that. In any case, what you can see around the top of the cycle is you get this huge influx of new users that pushes the price up to its kind of peak and then comes off again. You can see that here. What's happening in this bull market is that we've definitely had this first rush, which is potentially similar to this, but that second rush is the end of the bull market, right? And so what causes that? That kind of, end of the loosening cycle, right? So we need to go through all of that first and all the volatility first. Unemployment spiking a little bit, some weakness here, maybe inflation coming down and down, eventually something happening politically where they kind of push the stimulus in. Maybe the central bank gets a bit easier, pushes some stimulus in around the world with dollar liquidity, and then you get that kind of end bull market and then it draws down again. So I think we've had the first wave. That second wave is still yet to come, and it doesn't happen slowly. It usually happens pretty quick. You can see here, it happens over a few months, right? You get a real rush here, and in this bull market, real rush, and you've got 3-4 months of huge rush into the market, and then that's the end of it. So we haven't had that yet. And so that's what I'm waiting for. I think it will come. I don't know exactly how it's going to come, but I think it will. I don't think this is the top of this bull market. If you do trade crypto, check out the Bybit deposit bonus down in the description, up to 30K. The crypto investor course, I'll be updating it this month as well, free for all existing course members. So you can check that out down in the description as well. I'm James, it's MoneyZG. Cheers for watching, and I'll see you in the next one.